Assalamualaikum. We are going to continue with mixed group structure. What is mixed group structure? In a mixed group situation, the parent entity has a direct control interest in at least one subsidiary. In addition, the parent entity and the subsidiary together hold a controlling interest in a further entity. Let's look at this example. You can see from here, S, yeah, H is having a direct interest in S, whereby S is a direct subsidiary of H and H is a direct parent of S. This is the main requirement, that at least there is a subsidiary. There is a subsidiary in a way the subsidiary is directly controlled by the parent. Okay. And then the parent and the subsidiary together hold interest in another company. In this example, H hold interest in T and S also hold interest in T. H has 30% interest and S also has 30% interest in T. Let us see the explanation about this. H controls 60% of S. S is therefore a subsidiary of H. H controls 30% of T directly and another 30% indirectly through its interest in S. T is therefore a subsidiary of H group. Now we are going to see the date of acquisition. Suppose H acquired a 60% interest in S on 1st January 2012 and acquired its 30% interest in T on the same date. S subsequently acquired its 30% interest in T on 1st July 2012. Initially, from 1st January 2012, H exercises significant influence over T as an associate entity. It is only from 1st July 2012 that H has access to more than 50% of the voting power in T. T is therefore consolidated into the H group accounts as a subsidiary starting from 1st July 2012. Note that the definition of a mixed group does not include the situation where the parent and an associate together hold a controlling interest in a further entity. For example, H owns 35% interest in S owns 40% interest of W, and H owns 40% interest of W. So in this situation, H owns only 35% interest in S. So S is not the subsidiary of H. Therefore, the main requirement that there must be at least one direct subsidiary under H is not fulfilled. So this is not considered as a mixed group. So this is not considered as a mixed group, even though H holds 40% interest in W and S holds 40% interest in W. Altogether, it is 80%. But that does not constitute a mixed group because the requirement that H must hold more than 50% interest in S is not fulfilled. Okay. So in this situation, this is not a mixed group. Neither S nor W is a member of the H group, although S and W may both be associate of H. H interest in W might be calculated as before. S 35% times 40% plus 40% equals to 54%. Although H has an arithmetic interest in W that is more than 50%, it does not have a parent entity control of W, as it does not control S 40% stake in W. The conclusion, the approach is similar to deal with subsidiary. That is, an effective interest is computed and used to allocate share capital and retain earning. All consolidation workings are the same as those used in vertical group situations, with the exception of goodwill. The goodwill calculation for the subsidiary differs in that two elements to cost must be considered, namely the cost of the parent direct holding and the parent's percentage of the cost of the subsidiary holding. That is the indirect holding. Okay, so to make sure that we understand the situation and we understand the concept of mixed group, let us continue with understanding example 3 in page 553. So in our textbook, we are given an example 3 in page 553. So here we are given statement of financial position as at 31st December 2000 X3 for three companies. That is H, S, and X. Okay, so we can see from here that, okay, respectively they have ordinary shares. H has 400,000 ordinary shares, S 100,000 ordinary shares, and X 100,000 ordinary shares. And then they have also retained profit brought down and profit for the current year. Okay, we can see under the asset side, H has investment in S. H also has investment in X. And S has investment in X. So you can put here the highlight. We highlighted here that H, basically H has two investment. The first one in S, 110,000, and the X, 30,000, whereas S has investment in X of 75,000. Other than that, they have sundry asset of 360, H 95, S, and X 180. In addition to that, they also have the statement of profit or loss for the ended 31st December 2000 X3, whereby all of them have revenue and expenses, and all of them have a profit before tax, and after that minus taxation, and the profit after tax is 20,000, 10,000, and 20,000 respectively. And we can check this one. It must be the same as stated in the statement of financial position, 20, 10, and 20. All right. So what are the additional information provided to us? The additional information provided to us state that, okay, H has a direct interest in S of 80%. H has a direct interest of 80% in S. So it means NCI is having 20% interest. And the date of acquisition is 1st January 20X1. 1st January 20X1. And the consideration transfer is 110,000. Whereas for retained earning on the date of acquisition, retained earning on the date of acquisition of S is 20,000. And then on 1st January 20X2, 1 year after that, S, the subsidiary, obtains a direct interest of 60% in X by paying consideration transfer of 75,000, and on that date, the retained earning was 10,000. On top of that, H is having a direct interest in X. So there are two investors of X. The first one is S, invest in 60%, and the second one is H, invest in 20%. Acquisition happened on the same day, that is on 1st January 20X2, by paying 30,000 as consideration transfer. So now we have to calculate what is the relationship between H and X. H has a direct interest of 20%. On top of that, H has an indirect interest through S. That is, the indirect interest is 80% times 60%. 80% times 60%, that is equal to 48%. So altogether, H is having a 60% interest in X, 20% through a direct interest, and 48% through indirect interest. And because the holding company is having 68% interest, the non-controlling interest is having 32% interest. So what we are going to do? First, we are going to calculate the goodwill. We are going to calculate the goodwill. Let us see how to calculate the goodwill. First, we are going to calculate the goodwill for S. We are going to calculate the goodwill for S. So, goodwill for S. The goodwill for S, because S is a direct subsidiary of H, then we can straight away put the consideration transferred here. Acquisition of 80%, the consideration transfer is 110,000. 110,000. And then we put all the fair value of net asset acquired that comprise of ordinary share capital, 100,000, and retained earning on the date of acquisition is 20,000. Altogether, the fair value of net asset of S on the date of acquisition is 120,000. So from this 120,000, we can calculate the non-controlling interest. That is 20% times 120,000. That is equal to 24,000. So 110,000 plus 24,000 equals to 134,000. And this 134,000 will be compared with 120,000. The result is there is a difference of 14,000, and 40,000 here is a goodwill. Yeah, 14,000 here is a goodwill. So in acquiring S as a subsidiary, there is a goodwill of 14,000. What about acquisition of X? Yeah, what about acquisition of X? Since X is an indirect subsidiary of the group, so we can see that under the mixed group, basically H has a direct interest in X and also indirect interest in X. Yeah, direct interest in X and also indirect interest in X. How do we know? We know because from the question we are told that H has a direct interest of 20% and indirect interest of 48%. Now, the direct interest 20%, H spent 30,000 to purchase 20% interest in X. And then S acquire how many percent? S acquire 80% interest. Yeah, S acquire 80% interest in X. Interest in X. By making a payment of 75,000. By making a payment of 75,000. But from 75,000, we know that there is an indirect non-controlling interest. There is an indirect non-controlling interest of how many percent? The indirect non-controlling interest is based on the percentage that H has over S. H has over S. Okay, this one is 60% actually. Okay, so now 75,000 is paid to acquire 60% interest. Okay, and this 75,000 investment made by S is actually shared by two institutions, shared by two groups. The first one is H group. H group has how many percent? H group has how many percent? 80% interest. It has 80% interest in 75,000, and the non-controlling interest of S has how many percent? 20% interest. Right. So the indirect interest of the non-controlling interest is 20% times 75, which is equal to 15,000. Okay. So before we can calculate the actual non-controlling interest of 20%, let us list down what are the component of fair value of net asset acquired. That is share capital 100,000, and retained earning on the date of acquisition is 10,000. So altogether it is 110,000, and the non-controlling interest is 32%. 110,000 times 32% is equal to 35,200. So we add together 30,000 plus 75,000 minus 15,000 plus 35,200. It equals to 125,200. And we compare with 110,000, the fair value of net asset, we get a difference of 15,200. That is goodwill for acquisition of X. So we have settled the calculation of goodwill of X. Next, we are going to analyze the balance brought down. We are going to analyze the balance brought down of H and S. So we have two columns here, group retained earning, and also the non-controlling interest. We start with non-controlling interest. On the date of acquisition of S, the non-controlling interest is 24. On the date of acquisition of X, the non-controlling interest is 35.2, and the NCI, indirect interest in X, is 15. So 24 plus 35.2 minus 15. And then we analyze the retained profit brought down of S. From the equation, retained profit brought down is 60,000. And then we minus the retained earning on the date of acquisition, 20. So 60 minus 20 is 40. Times 80% is 32, and 40 times 20% is 8. So the group retained earning will be allocated with 32,000, and the non-controlling interest is allocated with 8,000. Now we analyze the retained profit brought down of X. Retained profit brought down of X, okay, is 60,000, and we minus the retained profit on the date of acquisition, that is 10. So 60 minus 10 equal to 50. And from this 50, how many percent will go to the group retained earning, and how many percent will go to non-controlling interest? 68% will go to the group retained earning, and non-controlling interest is 32%. And lastly, for the retained profit brought down, we have retained profit brought down of H of 80,000, and this 80,000 will not be allocated to anybody. So at the end, the balance of retained earning is 146, and the balance of non-controlling interest is 68.2. Next, we are going to analyze retained profit carried down. Retained profit carried down, as we have written on analysis of financial position brought down, we start analyzing the non-controlling interest on the date of acquisition with the same figure on the date of acquisition. NCI of S is 24, NCI of X is 35.2, and the non-controlling interest is 15. This is a indirect interest of non-controlling interest in X. And then we analyze the retained profit carried down. Retained profit carried down from the equation is 70. 70 is actually a combination of retained profit brought down and retained profit for the year minus retained profit on the date of acquisition, and the balance is 50,000. 50,000, 80% goes to group retained earning, and 20% goes to non-controlling interest. What about the retained profit carried down of X? Retained profit carried down of X is 80,000. We minus the retained earning on the date of acquisition, 10,000. So the balance is 70,000. Out of this 70,000, 68% will go to the group, and 32% will go to the non-controlling interest. And lastly, the retained profit brought down and carried down. Okay, retained profit brought down plus current year profit of H. The total is 100,000 and the amount is not allocated to anybody. So 100,000 all belong to the group. We add together the column of GRE and NCI. So at the end of the year, the total group retained earning is 187.6 thousand, and non-controlling interest is 76,600. What is next? So next we are going to prepare the consolidated statement of profit or loss and other comprehensive income for the year ended 31st December 2003. We start with revenue. So total revenue of the three companies. Total revenue of the three companies we add together. We add all together, and the amount is 610. And then expenses all together 430. Profit before tax is 180. Taxation is 130, and profit after tax of the three companies is 50,000. So out of this 50,000 profit after tax, out of this 50,000 profit after tax, some percentage will be allocated to non-controlling interest. And this, in this situation, non-controlling interest is allocated with 8,400. How do we get this 8,400? $8,400 is actually the combination of profit after tax of S allocated to non-controlling interest, and profit after tax of the other company X allocated to the non-controlling interest. Okay, we go to the first one. The profit after tax for the year of S is 10,000. 10,000 times 20% equals to 2,000. And profit after tax of X for the year is 20,000. And the non-controlling interest percentage is 32%. So it is 6,400. So 2,000 plus 6,400, it equals to 8,400. And this is the amount. 8,400 is allocated to the non-controlling interest. Out of 50,000, 8,400 allocated to non-controlling interest, and the balance 41,600 will be the profit of the parent. Then we prepare the consolidated statement of changes in equity. It was prepared based on the balance that we have calculated in analysis of financial statement brought down and carried down. From the financial statement brought down, The balance brought down of GRE is 146. The balance brought down of NCI is 68.2. On top of that, profit after tax for the year is allocated to the group 41,600 and non-controlling interest 8,400. So after we add this profit after tax for the year, the balance of the group retained profit is 187,600 and the balance of non-controlling interest is 76,600. Next, we are going to prepare the consolidated statement of financial position. The consolidated statement of financial position comprise of sundry asset 635,000, goodwill. This goodwill is from the two companies, 14,000 and 15,200. So total is 29,200 and the investment in subsidiary has been eliminated. Total asset of the group is 664,200. Financed by ordinary share of the parent amounting to 400,000, retained earning as stated in the analysis of financial statement carried down, amounting to 187.6, and also non-controlling interest stated in the analysis of financial statement carried down, 76.6. So that is all for the example. In the next session, we are going to discuss about tutorial question. Assalamualaikum.